What's going on, goats? Welcome back to BooKoo Bucks. My name is Raymo, and today I will be breaking down my trade from this morning on oil futures. In case you guys want to see the live executions or just the rerun of the trade, you guys are more than welcome to join the free Discord where I drop the recordings of these sessions. And if you want to trade live with me for free, go ahead and click the link in the bio to join my free Discord. I go live in there quite often. But nonetheless, I was mainly looking at the 1 hour time frame. I seen that price was clearly in bearish structure. We had a structure high to a low, lower high, lower low, lower high, lower low. So obviously, if price is printing lower highs and lower lows, we have clear bearish structure. So working with the current range at the time, I was using swing high to swing low and anticipating price to push bullish up into premium before potentially going on lower. So once again, higher time frame analysis was looking bearish to me. Now, in terms of my POIs, I always draw two POIs. I have an extreme and a continuation order block. In this case, I was actually monitoring this 1 hour bearish engulfing candle or order block, sorry, right in this area. The reason being is because obviously this is an order block, but it's also resting in premium, which is the first clue or the first rule that I want to see the order block follow through with. And then the second rule is going to be seeing that the order block takes out buy side liquidity. We had to go down to a lower time frame to see this. Right here, we can see that price took out buy side liquidity here. So we can plot this order block because once again, this last buy to sell move takes out buy side liquidity. So as we zoom out to the 1 hour time frame, yes, this is a 1 hour order block, but this is also the continuation order block the way that I teach it. So what I want to see is price come into the order block, give a entry technique, and in this case, it would be an M1 BOS, and then look to short. One thing to point out here, I wasn't looking to short in this area. Why? Because price was simply at the 50%. A lot of times, price likes to tap the 50%, create buy side liquidity, sweep that liquidity, and then push on lower. So in case you were trying to short here or potentially use some form of a breaker block all the way this way, this is mainly the reason why I did not use that, seeing that price was simply at the 50%. Not saying price can't drop from here, but more than likely, we want to see price get deeper into premium, especially if we just see price tap the 50% once again. Usually it's just building up liquidity to sweep out before actually dropping down lower. So once price tapped this POI, I simply went down to the 1 minute time frame. On the 1 minute time frame, I ideally want to see a 1 minute break of structure. So here we actually had an M1 low up to an M1 high, and price made a lower low here. Yes, price barely made a new lower low, but based off my rules, price got lower, so therefore it has to be a lower low. So I consider this a break of structure. From here, even on the 1 hour time frame, sorry, the 1 minute time frame, I still want to see a pullback up into premium. In this case, you might be asking, why did I actually haven't even shown my entry just yet? But let me do that first, actually. So on the 1 minute time frame, I want to see price pull back into premium. And once price gives me a bearish engulfing candle, which would be here, I can take a short and have my stop loss above the M1 time frame. I take a short here because price gave the engulfing pattern. In this case, it took two bearish candlesticks to engulf the first bullish one. And what I want to see is I want to see price close underneath the last bullish candle's wick low. So once price closed here underneath that last bullish candlestick's wick low, I entered and had my stop loss up here. The reason why I have my stop loss up here is because if price is truly in M1 structure, price should not break above this high. If price pulls back and does one of these and then goes on lower, this is simply just a complex retracement, meaning price is just pulling back further to take out maybe some more buy side liquidity before pushing on lower. So that's why one, I don't have my stop loss here because price could pull back a bit further. I have my stop loss up here because this is the strong high if price is truly giving a break of structure rather than a fake out or a structural inducement sell side liquidity sweep to push on higher. Now you may be asking, why was I willing to short right here at the 50%? Well, two things. One, I'm willing to short here because my stop loss is still protected above this high. Price could have maybe used these equal highs to sweep it, then go lower. That's why my stop loss is up here. But I was also more confident on taking shorts here because we can see liquidity was swept within the range before tapping into the 50% or slightly above. Let's go down to a lower time frame to maybe see some finer details. So right here on the 15-second, we can see all of these equal highs that got created, not only here, and even a little bit here. Price swept it before pushing on lower. So the fact that I see price create buy sell liquidity and then price sweeps buy sell liquidity before tapping into the 50%, this is more of a sign that price will reverse from the 50%. If you don't see price create liquidity before tapping into the 50%, usually that 50% or the liquidity lying at the 50% will be the liquidity. So hopefully that makes sense. But nonetheless, took that short and then put my stop loss above that strong high. And this was looking good for a short amount of time. Price ended up kind of pushing on lower. In this case, this would not be a valid pullback based off the way I trade. I need to see two bullish candlesticks, and the second candle must get above the first candle's wick high. So in this case, price never got above the wick high. So therefore, this was all just one push. Now from here, we had a two candlestick pullback. As you can see, the second candle actually gets above the first candle's high. So this is a valid pullback. So based off my rules of structure, this would be the new M1 high down to the new M1 low. Price gives a pullback, makes a lower high down to a lower low. So once price actually gave me the new structure points, I was at that point willing to move my stop loss to break even. And one thing I forgot too, once price made a new low, I did minimize my risk by putting my stop loss above this M1 high. The reason being is because if price is down here, I should not see price break above the M1 high, because if it does, most likely it's a break of structure to go on higher. So basically, I am trailing my stop loss above the new M1 highs until I am able to put myself in a risk-free position and allow it to run. So once price pulled back here and made a new low, my stop loss was simply at break even. And as you can see, price ended up coming up and tapping my break even. So unfortunately, price hit the break even, so I really did not profit from the trade. But the good thing is I was able to manage this trade accordingly and not come across an actual losing trade. So sometimes this does happen. This is a perfect, basically textbook setup. M1 BOS coming from the POI and then price falling a bit lower. But unfortunately, it did not play out. As you can see here, price dug a bit deeper into the POI. It looks like price simply wanted to take out some more buy sell liquidity above here and even one more push above here before pushing on lower. So ultimately, it looks like this analysis is playing out. The unfortunate part is I was not able to capitalize on this move. So one thing I want to point out is realistically with trading, that is going to happen sometimes. You are going to have the right analysis, but not have the right entry. And it is on us to kind of backtrack or back test to see how we could have improved. And to be honest with you, sometimes, at least from my perspective, there are really sometimes there's nothing you can necessarily do better. Because even in live, I said if price were to give another M1 BOS up here, I would most definitely look to short again. Potentially, this was just a tad bit too early. But if you notice, price actually even gave an M1 BOS here, but price never pulled back. It just straight dumped off from here. Now, if I look back at it and price ended up giving a pullback up into here, I possibly could have shorted, and that could have been a way that I could have capitalized on this move. But ultimately, there really was nothing necessarily better. You could also argue that if I would have shorted here, as I did here, but gave myself a wider stop loss, let's say we use the 50% of the order block or even the entire order block, we definitely would have still been in this trade. But honestly, me personally, this RR is most likely going to be terrible. And based off the way that I trade, trying to confirm my entry rather than just hoping and praying that the POI is going to hold, this doesn't really work out for me. I'm also not a limit order trader, so I'm not going to simply take a trade or place a trade with a limit order here, with the stop loss above here, and then just hope that price reverses from here. I need to have the confirmation that price is going to reverse from there rather than not. So I'll bring it up because you might have a different trading style than me. I would recommend that you backtest to see if there was another entry technique that you could have used that could be beneficial for you. But for me, I personally like to wait for that M1 BOS. that prevents me from losing more often than not. I also like to manage my trade the way I did here because it helps me from losing more often than not as well. Or at the very least, it helps me minimize my risk, meaning I don't lose as much. So, for example, if I'm risking 1% on this specific trade setup here, when I took the short, stop loss above here, once price made the new low, I could simply take that 18-point stop loss or so and move it down to 9. Now, with this 9-point stop loss, price is above this M1 high, and I minimize my risk by creating or not creating, um, moving my stop loss and only risking basically 0.5%. This doesn't mean I'm partialing out. This just simply means I'm holding my contract size or a lot size, whatever it is, and not risking as much, but still allowing price to play out. So hopefully that makes sense. Hopefully this is at the very least a good educational video for you guys to understand what kind of realistically happens with trading sometimes. Hopefully you guys enjoyed it. Let me know if you guys have any comments, questions, or concerns. Thank you for watching, and I will catch you in the next one.